RBI, though, switching focus from auto to banks, has released its latest financial stability report, wherein it has expressed confidence in India's economy despite geopolitical risks in the near term. RBI has stressed that the outlook for 2026 and beyond remains uncertain. Ankur Mishra with the details from that report.
Yes, financial stability report is pointing to near-term challenges which are spoken in the report by Reserve Bank of India Governor. In the forward, he says that global uncertainties remain. However, if you talk about the macro stress test, that also paints a quite positive picture for the Indian financial system. If you talk about capital adequacy ratio, aggregate CRAR stood at 17.1% as on September 2025, but under the three scenarios which every time a test is conducted for the adverse scenario, in the baseline scenario, if you consider the CRAR may decline to 16.8%. If you consider adverse scenario 1, the adverse scenario 1 indicates that the CRAR may fall to 14.5%. And the fall may be to 14.1% under the adverse scenario 2, which is the highest stress test for the banks. If you simply look at capital conservation buffer test, only for 2 banks may need to dip under CCB under the adverse scenario 1, and for adverse scenario 2 it may be 4 banks. But more importantly, the stress in the system is under control. And why I am saying this? Because GNPA may improve to 1.9% versus 2.1% as on September 2025 under the baseline scenario, and adverse scenario 1 indicate that it may rise to 3.2%, and 4.2% is the figure which comes under adverse scenario 2. Similarly, the case is there for NBFCs as well. The capital position remains strong at an aggregate level, and the report also points out that the profitability remains stable. Under the adverse shocks, aggregate capital remains above regulatory requirement, and that is the case not only for banks, for NBFCs as well. All in all, yes, there are challenges which are there in 2026, but the financial system remains strong.